It's 11 p.m. You should be in bed. You have work tomorrow morning. Your trading day was supposed to end at 3 p.m., but you're sitting at your desk, staring at the USD chart. The price is moving. Not dramatically, but it's moving. You see what looks like a setup forming. Your brain whispers, "This could be a good trade." You're already at your desk. Why not just take this one trade? You know your trading plan says you only trade from 9 a.m. to 3 p.m. Those are your hours. Your strategy is designed for those hours. The market conditions during those hours are what you studied. Trading outside those hours isn't part of your plan. But you're here. The charts are open. The setup is there. It feels wasteful not to trade it. So you take it. The trade immediately goes against you. You're down $200 within 10 minutes. Now you can't sleep. You're watching the trade, hoping it reverses. It doesn't. By midnight, you're down $400. You finally close the trade at 1 a.m. and go to bed, but you can't sleep properly. Your mind is racing about the loss. The next morning, you're exhausted. You had 4 hours of terrible sleep. Your planned trading from 9 a.m. to 3 p.m. is a disaster because you're too tired to think clearly. You make more bad trades. You lose another $300. That one trading decision at 11 p.m. outside your designated trading hours cost you $700 and destroyed your next trading day. And this pattern repeats multiple times per week. This was my reality for 8 months. I had clear trading hours. I knew I should stick to them, but I kept trading outside those hours anyway. And every time I did, it cost me money, sleep, and trading performance. Let me tell you about how I finally stopped trading outside my hours and how that one change increased my monthly profits by $3,200. My trading hours problem. I established my trading hours after my first 6 months of trading. I'd studied my results and found that my best trading happened between 9 a.m. and 2 p.m. My strategy worked best during those hours. My win rate was highest, my execution was cleanest. So I created a rule. I will only trade from 9 a.m. to 2 p.m. Outside those hours, I will not trade. This rule made perfect sense. My data supported it, my analysis confirmed it. I knew it was the right rule. But I couldn't follow it.
But here's what really shocked me when I analyzed the data. Trades taken during my designated hours, 9 a.m. to 2 p.m. Total trades, 218. Win rate, 63%. Average profit per trade, $87. Total profit, $18,966. Trades taken outside my designated hours. Total trades, 156. Win rate, 34%. Average loss per trade, -$63. Total loss, -$9,828. My designated hour trading made me $18,966. My outside hours trading lost me $9,828. My net profit for 3 months was $9,138. If I had simply not traded outside my hours, my profit would have been $18,966. Trading outside my hours cut my profits in half. But it did worse than that. The outside hours trading also ruined my sleep, increased my stress, and made my designated hours trading worse because I was always tired or emotionally compromised. Why trading outside your hours is so destructive. Understanding the financial cost of trading outside my hours was important, but understanding why it was so destructive helped me see the full picture. Reason 1: wrong market conditions. My trading strategy was designed for the London-New York overlap. That's 9 a.m. to 2 p.m. Eastern Time. During these hours, volume is high. Spreads are tight. The market moves with clear trends. Outside these hours, the market is different. The Asian session has lower volume. European close has erratic movement. Late night is dead and choppy. My strategy wasn't designed for these conditions. Trading outside my hours meant trading a strategy in conditions where it doesn't work, like trying to surf in a swimming pool. The strategy needs specific waves. Wrong conditions mean the strategy fails. Reason 2, decision fatigue. By the time 7 p.m. arrives, I'd already made dozens of decisions that day. Work decisions, life decisions, trading decisions during my designated hours. My decision-making ability was depleted. Decision fatigue makes you take worse trades. It makes you break your rules. It makes you chase setups that don't meet criteria. My outside hours trades were almost always worse quality than my designated hours trades because my brain was tired. Reason 3, emotional trading. I wasn't trading outside my hours because of great setups. I was trading because of emotions. Boredom, FOMO, anxiety about missing opportunities, restlessness. These emotional reasons led to emotional trading. Emotional trading is losing trading. My outside hours trades had a 34% win rate, not because of bad strategy, but because they were driven by emotion instead of strategy. Reason 4, sleep disruption. Trading at 11 p.m. meant I was looking at screens right before bed. The blue light, the mental stimulation, the emotional reactions to trades. All of this destroyed my sleep quality. Poor sleep meant poor trading performance the next day. My designated hours trading suffered because I was always tired from late-night trading. This created a vicious cycle. Reason 5, no boundaries. Trading outside my hours meant trading had no boundaries. If I could trade at 7 p.m., why not 9? If I could trade at 9, why not 11? Without hard boundaries, trading consumed my entire life. This lack of boundaries meant I was always on. Always watching markets, always thinking about trades. This constant vigilance was mentally exhausting and unsustainable.
The psychology of trading outside your hours. The financial and practical costs were clear, but I needed to understand the psychology. Why couldn't I stop trading outside my hours even when I knew it was costing me money? Psychological driver 1, FOMO, fear of missing out. The market is always moving somewhere. If I'm not trading, I feel like I'm missing opportunities. My brain sees movement and interprets it as opportunity. The fear of missing that opportunity overrides my knowledge that trading outside my hours loses money. FOMO is powerful because it focuses on what you might gain, the trade you might catch, while ignoring what you will lose, the statistical reality that outside hours trades lose money. Psychological driver 2, incompleteness aversion. My brain had decided that real traders trade all market hours. If I'm only trading 9 to 2, I feel like I'm not really trading. I feel like I'm doing it part-time. This feeling of incompleteness drives me to trade outside my hours to feel like a full trader. But this is a false belief. Professional traders often have very specific hours. They don't trade 24/7. But my brain's need to feel complete drove destructive behavior. Psychological driver 3, boredom and stimulation seeking. By 7 p.m., I'm bored. Trading provides stimulation. Even if I know it's bad for me, the immediate relief from boredom feels more important than long-term results. My brain is essentially choosing the immediate reward, relief from boredom, over the delayed reward, better trading results, from only trading during designated hours. Psychological driver 4, opportunity maximization bias. My brain believes that more trading equals more opportunities equals more profit. This belief is false. My data proves it, but it feels true.
So my brain pushes me to trade as much as possible, including outside my hours. This bias makes me feel guilty for wasting market hours by not trading, even though not trading outside my hours would increase my profits. Psychological driver 5, the just this once trap. Every time I traded outside my hours, my brain would justify it. Just this once. This setup is too good to pass up. I'll go back to following my hours tomorrow. But just this once happened 67 times in 90 days. The just this once trap is powerful because it makes each violation seem like an exception rather than a pattern.
The failed solutions. Before finding what worked, I tried multiple solutions to stop trading outside my hours. Most failed completely. Failed solution 1, willpower. I tried just deciding not to trade outside my hours. I will not open my platform after 2 p.m., I promise myself. This lasted maybe 3 days. Then I'd see the market moving on my phone. The temptation would be too strong. Willpower alone couldn't overcome the psychological drivers. Failed solution 2, removing apps. I deleted my trading apps from my phone, thinking this would prevent late-night trading. But I'd just use the mobile browser to access charts, or I'd reinstall the app, or I'd use my laptop instead. Removing convenience didn't address the underlying psychological need driving the behavior. Failed solution 3, reminders and alarms. I set phone reminders. Trading hours are over. Close your platform. I'd set alarms that would ring at 2 p.m. These reminders were easy to ignore. My brain would dismiss them. I know, but just this one setup. Reminders without enforcement are just suggestions. Failed solution 4, tracking the cost. I thought if I tracked how much money I lost trading outside my hours, the evidence would motivate me to stop. I had the data showing I'd lost $9,828. But knowing the cost intellectually didn't stop the behavior. My emotional brain didn't care about spreadsheet data when it wanted to trade at 9 p.m. The solution that actually worked. After 4 failed solutions, I found something that actually worked. It wasn't a single technique. It was a system with 3 components working together. Component 1, physical platform lockout. At exactly 2 p.m., I would close my trading platform. Then I'd use a software called Cold Turkey that would block access to my trading platform, broker website, and all trading-related sites until 9 a.m. the next day. This wasn't just closing the app. This was making it impossible to access trading for the next 19 hours. Even if I wanted to trade, I couldn't. The software blocked access at the operating system level. This physical lockout removed the opportunity to trade. I couldn't rely on willpower because the option was completely removed. Component 2, alternative evening activity. I needed something to replace trading. Boredom was driving my evening trading. So I scheduled a specific activity every evening from 7 to 9 p.m. Sometimes it was exercise. Sometimes it was a hobby project. Sometimes it was time with family. The activity varied, but the schedule didn't. 7 to 9 p.m. was blocked for non-trading activities. This addressed the boredom and stimulation seeking that drove evening trading. My brain got stimulation from other sources. Component 3, morning routine lock. I was also trading early before my designated hours, before 9 a.m. So I created a morning routine that prevented early trading. I wouldn't turn on my computer until 8:45 a.m.
Before that, I do a morning routine. Coffee, review trading plan, check my trading journal from yesterday. This routine prevented the impulsive, just one quick trade that would happen if I opened my platform at 6 a.m. These three components worked together. The physical lockout removed opportunity, the alternative activity addressed the psychological need, the morning routine prevented early trading.
The transformation. Within the first week of implementing this system, something remarkable happened. I stopped trading outside my hours completely. Not because of willpower, but because I'd removed the ability to trade outside my hours. The software blocked access. My evening was scheduled with other activities. My morning routine delayed platform access. Week 1 results. Days traded, 5. Days traded outside hours, 0, up from 4 to 5 per week previously. Designated hours profit, $920. Outside hours profit, $0. Net profit, $920, up from typical $300 to $400 weekly. Month 1 results. Days traded, 21. Days traded outside hours, 0. Designated hours profit, $3,700. Outside hours profit, $0. Net profit, $3,700, up from typical $1,200 to $1,500 monthly. By eliminating outside hours trading completely, my monthly profits increased by approximately $2,200 to $2,500. But the benefits went beyond just money. Non-financial benefits. My sleep improved dramatically. I was getting 7 to 8 hours of quality sleep instead of 4 to 5 hours of interrupted sleep. This made my designated hours trading even better because I was well rested. My stress decreased. I wasn't constantly thinking about trading. When my platform locked at 2 p.m., I was done. I could enjoy my evening without market anxiety. My relationships improved. I was present with family in the evening instead of distracted by charts on my phone. My designated hours trading improved. With better sleep and less stress, my 9 a.m. to 2 p.m. trading had higher win rates and better execution.
How to implement this system. If you're trading outside your designated hours and it's costing you money, here's how to implement this system today. Step 1. Define your optimal trading hours. Analyze your trading data. When do you have the best win rate? When is your strategy designed to work? When do you have the mental energy for quality trading? For me, it was 9 a.m. to 2 p.m. For you, it might be different. But pick specific hours based on data, not on "I should trade more hours." Step 2. Install blocking software. Use software like Cold Turkey, Freedom, or FocusMe to block access to your trading platform and broker websites outside your designated hours. Make the block impossible to bypass easily. This removes the ability to trade impulsively outside your hours. Step 3. Schedule alternative evening activities. What will you do instead of trading in the evening? Schedule something specific. Put it in your calendar. Treat it like an appointment you can't miss. The activity should address whatever psychological need was driving your evening trading. If boredom, pick something engaging. If stress, pick something relaxing. Step 4. Create a morning routine if you're trading too early, before your designated hours. Don't turn on your computer first thing. Do other things first. Exercise, breakfast, review yesterday's trades. Only open your platform at your designated start time. Step 5. Track your results. For the first month, track how many days you successfully stayed within your hours, your profit during designated hours, your total profit, your sleep quality, your stress levels. You should see improvement across all metrics within 2 weeks. Step 6. Adjust if needed.
If you find yourself fighting the system or finding workarounds, don't abandon the system. Instead, strengthen it. Add more blocks. Schedule more alternative activities. Make the lockout more comprehensive. The goal is making it impossible to trade outside your hours, not just difficult. The bottom line. Trading outside your designated hours is costing you money. For me, it cut my profits in half. My designated hours trading made $18,966 in 3 months. My outside hours trading lost $9,828. I was netting only $9,138 when I should have been keeping all $18,966. But I couldn't stop through willpower alone. The psychological drivers were too strong. FOMO, boredom, the just this once trap. These forces overrode my knowledge that outside hours trading was destructive. The solution wasn't more discipline. The solution was a system that removed the ability to trade outside my hours. Physical platform lockout through blocking software. Alternative evening activities to address boredom. Morning routines to prevent early trading. Within 1 week, I stopped trading outside my hours completely. Within 1 month, my profits increased by $2,200. Within 3 months, I'd recovered the $9,828 I used to lose to outside hours trading. You can do the same. Define your optimal trading hours based on data. Install blocking software. Schedule alternative activities. Create morning routines. Track your results. Your optimal trading hours are when your strategy works best, when market conditions are right, when you have mental energy. Trading outside those hours means wrong conditions, tired brain, emotional trading. The question is, will you implement this system? Will you install the blocking software? Will you schedule alternative activities? Will you commit to trading only during your designated hours? Stop trading outside your hours. Start keeping the profits your designated hours strategy makes. That's how you finally break the cycle of late night and early morning trading that's destroying your results.